Good morning, guys. Thank you for joining in. This is a special webinar on algo trading psychology, or basically just trading psychology as such. And it's been something that we've been doing in phases, but this time we wanted to do it in a coherent way, where we basically talk about the problems that we face while trading. Our emotions. How do we we solve that in a systematic approach? And with some tools that we can use, what are the exercises that we can do on a daily basis to improve our trading psychology. So that's where we're going to be talking about. So our flow is going to be we'll basically talk about why there is emotion in trading, why is trading emotional. Then we'll talk about negative emotions that are related with money. There are positive emotions that are related with money. We'll talk about developing a trading psychology with tools and exercises. And then eventually we'd want to know, trading personality. So why do we get emotional with trading? And I think, again, trading when you start looking at it as a profession, and that's when you start looking at successful traders, and you start having expectations of trading, that it could be either your second income, or it could be maybe your career plan, independent career plan, and those kind of things. So you set up an expectation of it, and when this happens, and you see it as a profession or an activity which is a significant part of your financial health, you would also see your net worth fluctuating every second in front of your eyes. This does not happen in different other kind of businesses or professions that you do. You actually don't see it fluctuating within seconds, and at times just falling within seconds. There's also peer pressure, which is there at every end of day, not during appraisal cycles, not during review cycles. When you're in a job, during appraisal cycles or review cycle, you will have peer pressure, but that's not there here. It's every day. There's not any performance target. So in a job, you get a target, given by your boss, and those kind of things. Here, there's no performance target. It can be anything. Everyone has a different interpretation of it. Market is a boss that gives us feedback every day. So it's not something like a situation where you get a feedback on certain days, or there's a feedback day, but every day there's a feedback from the market if your strategy has worked, if your trading has worked or not. And that can be very demotivating at times, can be very strong on your emotions, and that's where things is. And then there is no hierarchy in this business or profession or job, because everyone can change roles very often. Someone can become a top trader with a higher capital, higher risk. Someone can become with a higher capital, someone can become with low risk as well. Lower risk guy can become a hero zero, and then he can do a higher risk trading as well. So everything will change. It's very flat in that sense. Market gives opportunities to everyone. So it's not that you have reached a certain scale and stage, then you cannot have drawdowns. You will still have drawdowns, and you might have even bigger drawdowns than other people. And unfortunately for all of us, markets don't fire us. So there's always a door open, and we always tend to come back. And that means that there is no other way out than developing your psychology, because you're gonna come back in the market sooner or later. Someone has exited from stock markets and says, I will do only mutual funds. Somewhere or the other, you will be able to, you would want to come back when you see your peer, and because that's how the markets are. That's how the psychology of money is. So when we look at it about the psychology of money, we look into some emotions, and then there are 4 major negative emotions that come in along with money. One is fear of losing it, guilt, shame, and envy. Fear in algo trading or systematic trading comes in from drawdown, overnight risks, and the fear that you will be losing your edge. While guilt comes, when you leave a strategy in DD or enter at a equity high, and then the strategy goes under drawdown, and then eventually the associated opportunity costs that are there. Shame comes in when we are starting to hide losses. We start blaming external factors, and then because of we are shameful of our performance, we don't talk about it. And envy is that what we have recently seen, a lot of pin tweet wars, and then we end up copying someone else's style, and then there's always a constant comparison. Now these negative emotions happen with everyone. It's not that it happens with beginners, it happens with pros, it happens with everyone, but there is a way to cope them up. Everyone tries to cope them up in a way, and this is a developing thing. It's not that someone has reached a level of psychology which is perfect. It never happens. Every time there'll be a new fear that you have to counter. There'll be a different kind of a guilt that you have to counter, different kind of shame that you would have to counter, different kind of envy that you will have to counter. So that's where the whole focus lies on how to deal with these negative emotions and balance them out. So you cannot hide it. You cannot hide fear, your drawdown fear. You cannot hide your losses. You cannot stop comparing with other people. But there is a way to do it in a positive manner. So when we counter fear with joy, when we counter guilt with optimism, when we counter shame with glory, when we counter envy with competition, that's when we are basically converting them into positive emotions or converting the positive side of the emotions. So when we say fear to joy, it's not euphoria. It's accepting the ups and downs of trading while managing the risk. So when we say that, you have to be optimist, you don't need to be overconfident. The idea is not to feel that everything will be always working fine. It's just a measured approach at looking at wins and losses, and systems will have these wins and losses. So it's just a measured optimism that you need to have. When you say glory, doesn't mean that you will be showing off. It means that we'll all have wins and we'll all have losses, but we have to treat both of them equally. One of the things that I keep on doing is, it happens that when you have a big win, you start spending a lot on that day or that period. This is something that I have tried to avoid. So I don't personally, I don't try to spend on a day when I have had a good day in terms of my P&L. I'll rather do it on a day when I'm in drawdown, so that I can do a measured approach. I'll buy things that I need. I'll spend something which is very essential. And similarly, when you talk about competing versus envy, there should not be any jealousy. Everyone has a unique goal, and we're working towards that unique goal with our strategies, with our portfolio. It's all about the results, our results, because our results are gonna convert into our goals, not others' results. So when we're trying to develop our trading psychology, we are looking at this whole aspect of fear and joy, balancing it with a sense of control. We need to have that sense of control in our trading that will balance both. And then when we talk about guilt and optimism, it has to be balanced with diversification. When we talk about shame and glory, it has to be balanced with regular reviews of what we had done in the past, what we have done now. And when we talk about envy and competition, it's basically the goal orientation, which is important. So when we talk about sense of control, it's basically limiting exposure into certain kind of strategies, be it position strategies, be it direction strategies. You limit the exposure so that your fear will be controlled. When you're doing intraday, the fear will be less. When you do positional, the fear will be high. So when you measure it out and limit the exposure, that's where you'll have a sense of control. Another thing that you can do is calculate the maximum DD beforehand of the combination that you're using. Now that helps you a lot in terms of envisioning where you can be. So the fear will go away. The fear goes away only when you realize what actually it entails. People are afraid of dark because they have not spent time in the dark. So the moment they start spending time in the dark, they will start being less afraid. That's how it is. Same is the case with when we talk about diversification. It's basically the portfolio of strategies that needs to be there. That will help us, between the guilt and optimism that everything is working fine, and then we kind of keep on increasing allocation to that strategy, and then suddenly there is a drawdown in that strategy, or there is a drawdown in a strategy, but we discard the strategy and then it starts coming back. It's basically the diversification that needs to be there. We need to have low correlation to aim the consistency that we need with the diversification, and that's something which we've been talking about in the past as well. When we talk about review, it's basically recording or logging daily results with comments, and you look back into your past performance and comments, and then that will give you the motivation to stay through that tough time that you had, because something that did not work today might have worked 2 days back or 4 days back, and doesn't mean that it'll stop working. It will work, but it's just that there's a phase that it will not work, and you have to accept that. And all this basically sums up into something like a goal orientation. So we have to have a sustainable ROI that we are targeting. We build a portfolio around it. We keep a track of it, and we have to be fixated on the process. Outcome will be decided by the market. That's the basic thought that we need to have. While we're talking about all these things, right? Individually, we have looked into capital allocation, portfolio and how to manage your own portfolio. We've also looked into building your own portfolio and having low correlation in the portfolio. We are regularly ourselves at StrategyOne doing daily logging of our performance, our managed account performance, our member performance with market commentary. And then when we talk about targeting a sustainable OI and building a portfolio, that's all these things merge into that. Lastly, it's about knowing your personality. So it's very important that when we even when we look into something like developing our trading psychology, it's important to get an idea about what kind of a trader we are, and that's where the trading personality comes in. So we have to know our personality that is there. So are we conservative? Are we very conservative? Are we mild aggressive? Are we very aggressive? So this basically defines a max drawdown risk. Again, these are things that we have talked about earlier, and we will be sharing the videos that you can view and understand what this entails, and we can expand on this more. But basically, this is how we work on our personality as well as our algo trading psychology. So it both goes hand in hand: an acceptance of a MDD, knowing your personality type, and then managing those emotions with the tools that we talked about. With that introduction, or basically the presentation, we are done with the presentation part, and now we can start taking the questions. You can raise your hands, and you'll be allowed to speak. I can go back to any of these topics if there was no clarity. Anubrata, just 1 second. Hello?
Hi, yeah, am I audible?
Yes, you're audible.
Yeah, so this session was great, thank you. But I wanted to know regarding the strategy is one of the thing. So I am
So Anubrata, we will connect with you on the strategies. The idea
okay.
was with this webinar
Okay,
was to
fine.
basically talk about the psychology.
Got it. Fine.
Sure. Anyone else, guys? I hope I was not too fast. The idea was to also give a gist of it. Of course, psychology. When you develop a psychology, there has to be a lot of back and forth, a lot of discussion on what it entails, what we need to do on a daily basis. So these things would definitely be there, but something that we can work out from time to time. So you can ask me any questions that you have. Raise your hands, and we will answer those things, and we can go back to any of these concepts. Hi, Pratik.
Can you hear me?
Yes, Pratik, I can hear you.
Yeah, wonderful presentation. I got the tail end of it. I was thinking, is it like with you know people getting more experience with algo? Is it that we change from being like, so right now find myself being a little conservative on the conservative side? Yeah, this slide that you were talking about. Yeah. Do people with time change and become maybe more aggressive, or I mean, is it a good thing to do that, or you know, as we get more confidence and we get like consistent returns, does that shift our mindset?
A very good question. Actually, that happens with how your personality evolves,
Mm,
with age and with experience in trading. When we talk about building our psychology, so when your psychology is strong, you can become a bold trader and you can take big risks and calculated risks in that sense.
right,
So you might take a big bet in that case because your psychology is strong. So you would have seen this movie called Big Shot.
mm,
Michael Burry had his psychology was, very strong that even at a 98% drawdown, a 98% loss that he had, he did not close it. And he was still running it. He was still running it. So that's how, the psychology is built. Of course, not everyone can go there, but you can always switch basis your own understanding and your own diversification.
got it. Thank you.
You're welcome. Anyone else? Any questions? I'm sorry, a lot of you guys would have joined a bit late, and the presentation has been completed. We will be sharing the recording as well, so don't worry on this.
I'd like to add to something that what Pratik said just now. There's
Yeah,
another
Ankur.
perspective to that, Pratik. When someone is trading using a particular set of strategies through which he's comfortable, over time you also accumulate certain profits, and that profits in itself gives you the confidence to move to a slightly higher risk appetite. But yeah, Vishal rightly said that it completely depends on the psychology. But having some profit buffer gives you that appetite to take a bit more risk.
Yeah, Ankush, sir, that's exactly what's happening with me. Like, I've been comfortable for a while, and now I have some profits. Now I'm thinking I'm getting bolder. So I was wondering if that's like, why is it wise to do that, or should I still stay a little conservative?
I would say that don't upgrade yourself couple of notches directly, because then drawdowns could come anytime. And then once you'll see all the profits wipe out, say in an unforeseen situation, then you will go back to being very ultra conservative. So move to an aggressive stance only very gradually at a very slow pace. So give yourself time to adjust to the new set of strategies that you deploy.
Okay, got it. Thank you, sir.
Pratik, another way of looking at it is, let's say you started at let's say 50 lakh rupees, and you've been trading and been trading for a couple of years, and now you're at 1 CR. 50 lakh rupees, 5% drawdown would have been 2.5 lakhs. At 1 crore, 5% drawdown is 5 lakh rupees. Can you afford that? Now that question you need to ask yourself every day, because even if you have gained it, the idea is not to lose it. That's the first idea. You have gained it. You want to make sure that gain stays with you.
Got it. Got it. Yeah.
So that's one of the ways of looking at it.
Right. Thank you.
Any other questions? So we do have a host of other videos that we have explained some of these parts of trading psychology, and how we can use it, use those tools, and we will be sending those like videos across along with this thing that let's say if you want to do your capital allocation, how would you do it? If you want to do your portfolio correlation, how would you do it? Those kind of things would be available along with this video. when we share it with you. So you can always refer back to those videos as well. Any questions, guys? No questions means that either I was too good or too bad. Maybe it went over, it was too fast and people could not understand that. That's probably something which could be there as well. So I'm just wanting you to give me a feedback that can we, explain it again. There's some concept that you want to talk about. Anyone, guys? Not many questions, it seems. So we can call it a day. For those who have joined in late, the webinar has been done. We are in a Q&A session right now. The summary of the developing a trading psychology is here on this page that you are able to see. Anant, yeah. Hi, Anant. You can unmute yourself and speak.
Hello? Can you hear
Yes,
me?
Anant. Yes, yes.
Okay. Hey, Vishal. So just a point to add here, right? When you say, especially on the glory and review part, where you say record slash log daily with comments, there's not a lot of review that you could do in an algo, right? Because it's what the algo does in that market condition. So while I understand from a discretionary perspective, you could see how your strategy worked or did not work, and is there a tweak you need to add and things like that. But when it comes to algo and our subscribers, right, there's very little we could actually do to log any comments on it, other than just track the P&L. Right?
Yeah, so the way I do it is, if you would have seen my Twitter logs, I basically look into three parts: what worked, what did not work. If something gave results and then it gave took away the profits. So for example, I'll basically talk about, did non-directionals work well today? Did overnight strategies work well today? Did directionals work well today? And if something worked well, did it stay throughout or it has given upon its gains? So these are the kind of things that I'm logging, and these are things that you can log for algo. Yes, you're right. You cannot log the trade, but you can log your performance. You can log the performance of the algorithms. And Anant, you do a very good job of recording your algo performance on a daily, on a weekly basis, and analyzing it, and then deciding what to put more allocation on. So some sort of that recording is also very important. And you look back into the results, right? I mean, that's why you increase your multiplier on GMP, because you know that it will work. And that's how it gave you the confidence, because you have seen it recovering from DD in the past.
Correct. So my point is, you could log the trades and the P&L, but not necessarily the trade or the performance of the algorithm against its strategy, the way you could do it on a discretionary trade perspective, right? So that's really in your domain, right? As a creators, you probably have a much better idea of the logging in relation to the performance against the parameters of the strategy itself. While what typically we do, or at least I do, is do broker reconciliation and see how the P&L moved and things like that, right? And just compare across the strategies on a given day. And and that's it.
Sure. Thanks, Anant. Anyone else has got any questions? You have to raise your hands, and then we'll allow you to speak. Hi, Mrinal. You can unmute yourself and you can speak.
Okay. Hi, Vishal. I joined late, so I'm not sure the question I'm going to ask we have already covered. So I see that one important thing you talked about here in the second column is row correlation to inconsistency, right? What is the best way to kind of identify different strategies which has a low correlation?
Yeah. So, Mrinal, correlation is a statistical concept, basically of matching two data sets, and it does a binary comparison of two data sets. So we use that, extensively in our, portfolio making, our own portfolio making when we make it for StrategyOne strategies. Along with that, then there is another, aspect of correlation, which is, diversification from a different level altogether, from the core of the strategy. So that is something that we do via, our own understanding of the strategies when we create strategies from that ground up that is there. And the best way, probably, without being, very, let's say, being very transparent, is that the creator will be able to tell you, how to diversify. There are two ways looking at it. One is that you trust the creator completely in terms of what he says. The another is that you see the data yourself. So that's how we try and do is we share you the correlation data. We share with you the live data. We try and explain what the strategies are to you. And once you go through them, then you will understand how they are, uncorrelated or lowly correlated. And then you can build a portfolio along with it. Unfortunately, we are not talking about the indicators. We cannot talk about the IP that we have, beyond an extent. But we can always explain that this is how it is working. And you can see it from the performance. The smoother the graphs, the smoother the performance, it is because of the low correlation between the strategies. So you'll have less drawdowns. You will have decent, consistent returns coming in the strategies because they are, put together in a combination. And that you can see, even in our case, there are combo P&Ls that you can see, and you will see the graphs in the P&L, and then you will realize, okay, they are nicely uncorrelated or lowly correlated, uncorrelated strategies.
Right. So I think that's going to work fairly well if we, go with one creator, and basically if we have the trust that creator himself on is creating the combo and taking care of this correlation. For somebody who is really a pure subscriber and maybe looking at different strategies, any at high level technique that they should use, is that they really look at record that daily PNL and do correlation in Excel or any other simpler technique that you would suggest?
Yes, you can do this Excel-based correlation, which is a statistical way of doing it. And, there's a lot of resources on internet for it. And, of course, we can also take give a, thing on how you can create your own correlation matrix. But essentially, yes, it basically works from the point of the creator sharing this information with you. And whatever stats you put in, they are bound to change as well. It might be that it's a good theta decay time, so all non-directional strategies are working together. But when other parameters come in, they might not be able to work together. And that's where, you will really see the effect of non-correlation. And having said that, there's another truth that is there, Mrinal. Each creator has all different kinds of strategies. So it is not that, picking one strategy from each creator might actually give you the good result, because everyone has a paired strategy, a completely non-directional strategy, a semi-directional strategy, an aggressive semi-directional strategy, a positional strategy, and a few also have directional strategies. So everyone has similar set as well. It's more about what is the comfort around it. Someone might say, okay, I am able to better choose, which strategy works from which creator, so they can do it with that. Someone would say, no, I would want to stick to one set of strategies because I know that they will complement each other. So they go for one set of combos of a creator.
Right. So I'm switching to another kind of a thought that came to my mind to ask. What is your recommendation if somebody is, let's say, starting and looking at increasing deployed capital? Is the approach should be something like this? But I'm just trying to contrast between these two. Right? I think generally the message that I heard a little bit earlier was gradually probably increasing the capital. Now between these two, what is going to be your suggestion? Is it that somebody takes let's say combination of low correlated strategies and with a lower multiple and run it for a significant amount of time, so that now they have a confidence, and then at one shot they bring up to the capital that they want, and then say that, okay, I have confidence in this combination, so I'm going to run in this combination with this capital? Or you think that multiples gets increased, let's say every few months and slowly and gradually, which is better?
So it entirely depends again upon the person, how they see it, right? So someone like, I'll just give you with an example within the team. So Vikrant, I think a lot of you guys know Vikrant is a different kind of a person. He's expanding his capital, at a slower pace. As soon as he's getting some more confidence on, running a particular set of strategies, he's increasing the allocation on those strategies. He's adding capital on those strategies. Someone like me, I gone in with my full capital. I've allocated it as per my trading style, which is basically something that we were talking about. Making your own understanding of what is your type of aggression that you have in trading, or your personality in trading, and then basis that choose what is the maximum drawdown risk, build a portfolio along with it, and then start with your entire. So I have my entire capital on it, right? So, and I'm basically running a particular type of MDD risk, and I know that, okay, this MDD risk will be there, and I'm happy with that risk. I'm looking also at the returns that I can get, and that's how. So, I mean, on 10th of October, I was down 6 lakh rupees in a day.
I'll probably tell you where this question is coming from, right? From I'm still early days using algos. I'm just trying to see, right? I thought I'm going to use this gradual approach, but what I found is I felt a few algos I thought I'm comfortable, and then I kind of gradually increased probably multiple. Now then I had some drawdown. Now what's happening with drawdown is my drawdown is on higher multiple, right? So now question is, I'm not able to correlate very well because my earlier profits are with lower multiple, right? So as a result, right, the correlation you are looking at, right, 5% drawdown, it's probably need a little bit better effort to understand, is this really 5% drawdown or it's a higher drawdown right now, right? So now there is a tendency, right? Should I be really scaling down, right? Then in my mind, the thought was maybe what I should do is I run a lower multiple longer a little bit so that I'm very comfortable, and then I switch to a specific multiple right now, and I forget about my previous PNL and look at it afresh and say that, okay, this is the drawdown now, right? So that's the thought that came in. So I'm just trying to see that how others experience this and anything that that makes sense for most of the people?
Well, it's a very difficult question. We'll have to take it one on one, and then I'll explain how we can do it, or you could do it. But to still give you a basic idea, how I increase the allocation on strategies is there are two or three models. One is that once you are gaining amount equal to the drawdown, right? Then you increase a new multiplier.
Mhm.
Or you gain 2x of the amount of the drawdown. And then you say, I will increase one more multiplier.
Okay.
Right. So in one sense, a strategy is feeding itself.
Right. That's an interesting thought. Maybe then, that way you would know exactly. Or maybe I should also probably have done a little bit better record creeping to understand that, at different multiples
Exactly.
per event, right? This is something probably I didn't do. So as a result, suddenly, it looks like there is the drawdown too large. Okay. Cool. Thank you.
And more than, just looking at the strategy, you should look into the allocation. Are you allocating into, a diversified set of strategies and the correlation? So once you have that, then mostly what will happen is even if you increase capital, yes, there might be a small setback, but you'll be able to recover from it.
Okay.
Raj, you had a question, and I had unmuted you. You can, you can unmute and ask a question.
Hey Vishal, thank you so much for the opportunity. Quickly, I know that it's a wonderful presentation. I just have a few questions regarding. It's pretty evident from the presentation that in order to build the confidence and to have that sanity maintained, irrespective of your MTM swings, the confidence has to be high. And in order to build such confidence, or the emotions basically, that you just need to really be thorough about what your strategies are, what your DDs are going to look like. Basically you do all kind of risk management activities. And I for sure can vouch for StrategyOne, because you guys have been very transparent enough in sharing the back tested data. That of course comes from TradeTron, and some of the historical data the forward tested data as well. My question here is, though we see, and then try to infer some analysis out of this data, still somewhere, we always have this fear in somewhere in the back of mind of some sort of, the black swan events, especially, some of us, do carry the overnight positions and things like that. So while I was just doing kind of an analysis to understand how do we overcome such kind of fear, then the analysts always suggest or recommend to stress test your strategies and see what would be kind of a what if scenarios. What if the market opens up 5% against your positions or 6% against your positions and things like that. So you build those those kind of scenarios to understand where do you stand, and what would be the worst case scenario in case if there is a black swan kind of an event, and then how do we fare up, and how you can then look at the brighter side of things when things are going wrong. So the reason why I'm giving you all this background is just trying to understand how StrategyOne is building such kind of a, or probably not done this kind of a stress test for the strategies that we use beyond the back tests and the other the historical data, just to build the confidence in the end users like us, to have the peace of mind and run these strategies without having any kind of a doubt. Of course, we know that not always everything can be covered. There's always some some sort of how do I say, some things that's definitely going to be not going to be in our control. So, but still, how do we ensure that we know at least cover at least like an 80-90%, 10% we leave it to the unknown. So how do we ensure that kind? How do we self also and for the strategy users also?
Thank you, Raj. So thanks a lot for your nice comments on the the presentation. So Raj, we do whenever we talk about the drawdowns in strategies like ZIP, or let's say ZAP, or positional strategies like GMP as well, we always talk about what has been the historical max drawdown and what is the possible drawdown. So let's say if there is a black swan event, and many times what happens is this black swan event, really when there is a black swan event, we don't know. For example, someone would say that COVID was a black swan event. I disagree completely, because the VIX was rising up from the first of or last week of February 2020, and it was trying to tell us that there's something that is going to happen. So it was not really a black swan, for that matter. So there is always this thing that what will happen in a black swan event. So when we do a spread, we know what we are going to lose, right? And that loss is going to be the spread between the two legs that we have. And basis that, again, the same stress test or things, we keep on doing the modification. So there was a discussion that some time back we had was, can we do spreads which are getting narrower as we move closer to the expiry, because the spread is not giving us any benefit. So we have implemented that in the strategy. In something like GMP, what could happen is that suddenly on the if it opens against a gap, then you lose 50, 60, 70% of the premium. So we have built that thing into the margin of the strategy. So these are measures that we will take as creators, but at the same time, everyone needs to understand and the risks that are associated with the portfolio that they are running. And that's where when you do the portfolio allocation, when you do this, as you said, calculating your max CD, if there was a 5% gap down, if there was a 10% gap down, what will happen? So those scenarios are something that you can calculate with our strategies as well, with any other strategies as well. So that's where it can be done and discussed along. And we have as well, whenever there's been a chance to talk about the max loss that can be there in a strategy like ZIP, we have always said it is going to be the difference of the spread. So if there's a spread difference of 500 points in Nifty, 500 into 25, that's the maximum. So 500 into 50 is the maximum loss that could be there. If there's a spread difference of 900 points in Bank Nifty, so 900 into 25, that's going to be the max loss that can be there. But of course, it doesn't really happen like that.
Thanks, Vishal. Thanks. I mean, this can also be done at an individual level if user wants to kind of have a consultation with the creators, and then have that one-on-one consultation, and then see what could be the potential max drawdown in case of an event with an X change or shift in the delta from the previous night position. And keeping that in mind, they can definitely have a piece of definitely a piece of sleep in the night, just to ensure that they know for sure that what could be the potential loss that they could face in the next day in case of a black swan event. So this will, in a way or other, since we're discussing about the trading psychology, this in a way or other can also boost that confidence and can also prepare the end user for a kind of a risk mitigation or a plan B as well in the long run to go.
So I mean, there are resources that we have got, Raj. So for example, when we talk about our the list that we will send you right now, the videos that we have talked about these concepts past, and that's what we will share the video, and you can actually go through it, ask us any more questions that you have on that.
Yeah, absolutely. Thanks, Vishal. That would help towards this objective. Yeah, thanks.
Yeah, welcome. Anyone else has got questions? I see a lot of people have joined in the bit just now. So I'm sorry, we have done with most of the presentation, but this is a summary of the presentation, so you can ask your questions if you have on this doubts related to trading psychology and those kind of things. we are there to sort it out and help you out with this. And yes, of course, the recording will be available. Any more questions, guys? Okay. So Jaxi, Prem Kumar, Rajkumar, Pratik, Rohini, JJ. I'm just trying to call out names who have not spoken, and I mean just to make sure that they they don't have any questions. And with that, okay. So Mr. Prem Chopra wants to speak. Yes, sir. You can unmute yourself and you can ask a question.
Okay, thanks a lot, sir. I have one question. At what point we should pause or stop the strategy? I mean, what are the parameters or situations where it's quite feasible to pause or stop the strategies? This is my question.
Mr. Prem, the best time to stop a strategy, or let's say, when to stop a strategy is when the creator asks you to stop. He has reduced his deployments. He is not showing you his deployments. I mean, that applies to us as well. And whenever we have said that we are not going to be deploying a strategy, we have openly said it to people. The second thing is, if you see a strategy which has reached its max drawdown, and then still beyond that point, it is not showing signs of recovery, and it has reached 1.5 times of the max drawdown that is there, that's when you stop the strategy. Or, again, something that we try and avoid is that when there is a max drawdown and then someone tries to change the strategy, because that's again one of the things that can happen and that can go wrong in quite a way, because once you change the strategy, you can actually get into a newer drawdown. So it's a very subjective thing. You need to understand it for yourself, how when you're not confident in a strategy and you want to stop it.
Okay. Thank you. Thanks a lot, sir.
Yeah. Any more questions, guys? Gaurav has recently joined. So thank you guys for joining in and asking us these questions, and we will be available for this presentation. Any discussion related to this presentation, it will be uploaded on YouTube, it will be shared on the channel, and we can keep on discussing how to improve our psychology and be better traders. That's the whole aim. Thank you everyone for joining in. With that, we will end the presentation. Hope you all had a good weekend and will have a good weekend going forward as well.
Thanks, Vishal.
Thanks, Raj. Thanks, Prem. Bye, guys.